a senior VC in a good firm can have no upper cap on their earning limit?
Yeah, safe to say that they
Wow.
wouldn't have an upper cap. A VC wears multiple hats and does multiple things. You are the one point of contact for that company. So you need to know.
The length and breadth of things.
Yeah.
You did your MBA after doing an MSc in economics, right?
Yes.
Why was that the case? I want to kind of understand your decision making process there. Alright guys, we finally have a finance profile on our show. In today's episode, we have Ayesha Dutta, who works as a VC at Stride Ventures. She started her career as being an equity researcher and moved her way forward to be a VC. She did all of this without having a formal degree in accountancy and finance. If you want to make a lucrative career in finance, this episode is for you because we share a lot of insights on the decision-making aspects of how to navigate your own career. Alright, Ayesha, thank you for having us at your place.
Thank you for being here. I'm quite excited.
Ayesha, why don't you share your journey with our audience?
So I'm a Calcutta girl through and through. I've spent most of my life in Kolkata, and I did my bachelor's in economics, schooling, master's in economics right there in the city. Post which I moved to Shillong for 2 years for my MBA, and thereafter the city of dreams, Bombay, where I've been there for the past 3.5 years. So that's my journey from city to city. If my life were a book, I'd say that there's always value to be had in connecting the dots backwards. So I'd call it connecting the dots backwards. I remember I was here in Matunga in Bombay, walking on a Saturday evening post work and discussing with a friend who is now going to be a founder as well. And we were just discussing about life in general, how things are, and we came to this conclusion that there's so much value to be had in tracing your steps backwards and seeing how each decision brought you to where you are today, versus thinking, okay, if I do this right now, I will be here in the future. So connecting the dots backwards makes more sense than connecting it forwards. And hence, if my life were a book, I would call it.
You did your MBA after doing an MSc in economics, right?
Yes.
Why was that the case? I want to kind of understand your decision-making process there. Also, was it because you wanted to get into a particular field that required you to do an MBA, which was not possible in MSc in economics?
I decided to do an MBA when I was in my first year during my MSc. So initially, I wanted to do a PhD, and I wanted to go out of the country for about 4 or 5 years to complete that and go into the research field. But then you figured out as and when you proceed on a path, right? And economics has been very fun to study. It's very analytical. It's very mentally stimulating. But when I was in my first years at my master's, I realized that it was getting narrower as a field for me. I would either have to specialize in macro or micro. Within macro, a certain specific area, say money and finance, or international economics. And I didn't want to go into that narrow research area. I wanted to have a broader perspective. And further, I didn't want to just do research. I wanted to do something where I can actually see the impact of my work day in and day out as much as possible. That's why I decided to go for an MBA, because it opens up a lot of doors for you. You can get into marketing or consulting or finance or even as an HR. You have a lot of opportunities in B school. And that's when I decided that, I'm not really sure which trajectory I want to go down right now, but I'm sure that each of these will give me an option to, work in a sort of firm where I can see the impact of my actions day in and day out as much as possible. So that's why I decided to, take the plunge in a different direction.
Who is better suited for an MSc compared to an MBA? Can you just list out some pros and cons for somebody wanting to, let's just say, make a career in finance?
If someone wants to do a PhD, go into core research, go into the teaching profession as a professor, for them, MSc is definitely something that they should pursue. If you want to be in the corporate world, if you want to, if you're okay with working in a big city, and you're okay with the lifestyle that a corporate offers, I think that is when you should be okay with an MBA. So there are two different career trajectories. I think a master's of science or a master's of arts, it leads you down the more education route, like you become a professor or you become like a researcher or an economist or a finance spokesperson. Whereas if you go down the MBA route, you can probably become like an investment banker in finance or a venture capitalist or someone working in private equity or in equity research and stuff like that. So there are two different routes to that. MSc is more suited for someone who I think wants to do the research aspect more and perhaps deploy that knowledge in a class.
So basically, it's like a hyper specialization versus you getting a bird's eye view of other domains as well, that you can combine all the skills, combine all the knowledge, and then pursue something. I'm talking about after MBA. Is it safe to say that?
It is, I would say. But everyone who does an MSc doesn't necessarily have to do the research or teaching route. Some of them also go into like analytics. A lot of my friends who did MSc in economics with me, they're working in data analytics firms and they're doing quite well. So it's a different, that again is a lot of research as well. So someone who really likes research a lot and wants to do that full time, I think an MSc is really for them.
So your first job at an IB firm was after MBA, if I'm not wrong.
Yes, it was my first ever job as well.
So how was it like you consciously wanted to get into IB?
No, I hadn't thought of it that way. In fact, when I joined B School, I was open to all sorts of options. I wanted to keep my mind broadly open. And Goldman Sachs was the first company on campus for my batch. And I got shortlisted for the role. It was for equity research. And I cleared all the rounds of interviews and I was 1 in 5 selected that year and 1 in 3 for equity research. From our campus of approximately 200 students. First company. So it was like a big deal for me then. And I think that the internship at Goldman is what actually set me up for a career in finance in case I wanted to pursue it. The experience at Goldman involved like they gave us a full spectrum of knowledge, right from financial modeling to be able to write research reports, to be able to analyze publicly listed stocks. And from there on, when you have that knowledge set built, if you're curious enough and you want to inquire about any area in specific, you can actually study about that area, say in your second year when you specialize and pick up subjects and, try and get into that area. The equity research internship actually set me up for, even getting shortlisted for finance companies in my second year. And when it came to investment banking, I think it was a 50% luck, 50% curiosity situation. So even for equity research, I hadn't targeted that role. I'm a naturally curious person. And I didn't have any accounting or finance knowledge before I joined B School, only limited to economics.
Right.
I had a science background in school. So I was very curious. Even before I joined B School, I went through a bunch of class 10, 12 accounting books just to understand how things are working and what are the broad terms.
This was during your internship?
No, this was before I joined IIM Shillong. I had a 2-week period where I was doing MSc and writing my thesis. And I also had to pack my bags to go to IIM Shillong. And I was like, I want to understand this because I'm not very confident in the subject. Let me figure out what it's about. And I remember going through the books and I got curious and I ended up liking it actually. And that's how I got into equity research. And then in equity research, I liked financial modeling a lot. It was a new concept for me. I ended up doing a course from FMBA other than the basic course that Goldman gave us, and picked up a lot of courses in finance by bidding in my second year, like investment banking and business valuation or behavioral finance in general, and developed a wealth of knowledge just by reading out of curiosity. I joined Nomura straight out of campus. It was a very coveted role in campus. And again, the first final placement company on campus. And I landed that job only because I was building a wealth of knowledge just by being curious, not because I targeted that specific firm. So I think a lot of IB firms or equity research firms or finance firms coming on campus, they look for that curiosity in someone, which will drive their learning even after they join the firm. And they also they're okay with people who don't have prior work experience in that field, because they can be easily molded to learn a lot of things firsthand in the exact way they want them to learn it. And that's what helped me, I think, as a cumulative effort of 50% luck and 50% curiosity, that helped me get into investment banking.
What does an investment banker do? If you had to summarize this for a layman term, or to explain somebody who is not sure if he or she wants to get into investment banking, or he or she is confused whether they should go in an equity research kind of role, how do they decide? Can you just help us draw some parallels here?
An investment banker is traditionally an advisor. You advise on mergers and acquisitions, or help bring in investors for IPOs, or help bring in investors for investing debt capital in the company. You essentially prepare a lot of pitch decks to get in investors and help the company in that process of M&A, IPO, or let's say leverage buyout situation. It's a completely advisory role in that sense. And we wear multiple hats and have multiple responsibilities. You could have 10 things running in parallel, each of them with specific deadlines, and each of them requiring high ATD, as we call it in the industry.
What is ATD?
ATD is attention to detail.
Okay.
You can't drop attention to detail in this industry. Right. So an investment banker, I would say, is like a juggler. You juggle multiple things at the same time. You should be okay with multitasking, and if your personality is such that you're okay to adapt to that, or you like doing it, or you're naturally good at it, then like you're well fit for the role. Equity research also, honestly, similar. You will be juggling multiple things, but it's more on the research side. So if you like writing reports after thoroughly analyzing pieces of information and drawing insights from them, then I think that is the role for you. But analysis is there even in investment banking.
Exactly. Yeah.
Just that the method in which it's done, like for instance, in equity research, you write a full-blown report. Investment bankers read a lot of equity research reports, digest that information, formulate their own views by speaking to companies that they're who are their clients, and then formulate a pitch to present to other people. So each of them is like a feeding ground for the next person, I feel. And like currently, I am working venture capital. So venture capital firms, they use the pitch decks made by investment banks for startups, digest information on that, and then decide with their own due diligence whether to invest in that company as well. So it's like a loop that feeds into each other in the industry.
Safe to say that equity research is the base for somebody who wants to just litmus test their liking for the finance field. Can they start as a equity researcher and then eventually branch out to what they want to do?
Absolutely. It's like a foot in the door, You have to get your foot in the door somewhere in the industry, because every job role requires some prior work experience in a relevant area. And I think equity research, you can come in from, say, an economics background, or even say a commerce background into equity research, and you can work in it and figure out whether you like this sort of a job. And then if you are okay with research, you can continue in that. If you want to go more towards the client-facing side of things, you can move to investment banking or venture capital or private equity. So yeah, it's a foot in the door. It's definitely an entry point.
Right.
So I joined as an analyst straight out of campus. The roles are like analyst, associate, VP, executive director, and managing director. This is across all IBs, the broad structure. You spend your first 3 years as an analyst, and your next 2 years as an associate, easily. And in those 5 years, you're not really facing the client constantly, or you're not sourcing deals. In venture capital, you do the sourcing, negotiation of term sheets, due diligence, presenting committee memos to the investment committee, driving the final investment, deployment, and monitoring the financial health of the company. So that's more client facing, I would say, from day one as an analyst.
Ayesha, so what a VC does in a nutshell?
Okay, I'll take you through a week in my life, because no 2 days are the same for me. So I work in venture debt, and my day looks like this. One day I could be, talking to an investment banker or a founder, trying to figure out if the company is a good fit for initial screening for investment. Another day where I've had advanced talks with the company, say 2 weeks ago, I could be negotiating on the term sheet, which is indicative before you start the due diligence to go for the investment in the company. Another part of my week could look into detailed due diligence on a company I'm already evaluating where the term sheet has been signed. And I'm preparing for presenting the diligence memo I've prepared to investment committee at the end of the week or early next week. So that's like how my week would be structured. Certain parts of the month, I would have a little bit of portfolio review coming up for companies I've already done investments in. So maybe that's about like 10 to 15% of my job is monitoring those companies who I have invested in, and just checking if they need help in certain areas where I can contribute, or just doing a financial check that okay, it's doing well, it's steady. In case a hiccup comes, I will be aware. So it's very varied, and I get the entire length and breadth of exposure from initial conversations, initial screening, final term sheet negotiation, due diligence, discussing about legal documentation for signing the deal, getting the go-ahead from committee to investing in the company, looking into deployment of money in the company, and then finally also just monitoring the company on a monthly basis. So it's a spectrum which covers end-to-end. Everything that can come in the process. So
Right.
a VC wears multiple hats and does multiple things. You are the one point of contact for that company. So you need to know.
The length and breadth of things.
Yeah.
Since your job requires you to stay afloat of the upcoming industries or the possible booming sectors, how do you research, and what are some of your go-to information sources that you would recommend a B school graduate or somebody who is interested in business and finance also to probably refer?
I think that firstly, one should be aware of certain basic economic and financial terms to be able to, go through information from news sources or articles much better than they would, by Googling it on the spot. I think that you lose the bigger picture if you're not aware of certain terms. And go to source of information for me, like I always pick one newspaper. The newspaper for me currently is The Mint. The content is quite condensed, and because I work with startups constantly, I am constantly reading articles from Inc42 or InTracker, just industry reports by other venture capital firms such as Bloom's Indus Valley report, and a consumer report by DSG Consumer Partners, just to have an understanding about theses other VCs are also building, and also build my opinion on them. So there are multiple sources of information, but my suggestion is that you pick 2 to 3 that you like, which cover your areas of interest, and you read them as regularly as you can.
So let's say when you get a pitch deck, a company comes in with a pitch deck to you. What are some of the primary things you look for as a VC?
Now this varies depending on the stage of the company. If typically, like, I'm a sector agnostic and stage agnostic investor. When you say sector agnostic, that means I look at multiple sectors: consumer, health tech, fintech, etc. But I have my favorite sectors also. I like consumer, fintech, health tech a lot more than I like, say, SaaS, for instance. So yeah, you look at multiple sectors. So there's no percentage for ideal growth as such. It actually depends on the stage the company is in. So a very early stage company, they would be growing at 2x or 3x at the least in their early stages till Series A, and then the growth would taper down slightly from say Series B to Series D, and then it would try to almost stabilize at a certain level. Say beyond a particular stage, but this varies depending on the sector the company is in as well. For instance, certain sectors like companies in health tech, they have a longer gestation period to grow. So for instance, I saw this health tech company which I did an investment in last year in August, where its MRR was less. MRR is monthly revenue. It was less than 1 crore, and 1 year from now, which is August 24 currently, they're at a monthly run rate which is almost 5 times. So that sort of a growth is not expected in every health tech company, but they had a good gestation period before we did the investment in them also. You see a sudden spike essentially, and you don't know when that spike is about to come, but it happens somewhere. and you have to have a hunch about, okay, that this company will have that spike. They're on the track. They're building something which has a white space. They're building something in an area where there's a white space. And they will be able to tap into it. They just need some time to reach out to the correct audience or find a way to reach to the correct audience.
So I want to get to now the most viewed part of all of our episodes.
Okay.
Can you guess what that is?
What is career progression and salary growth like?
There you go.
Okay, so I think whether it's equity research or investment banking or venture capital, you are well rewarded for your efforts. But the proportion in which the total comp is distributed is different. I would say anyone entering the space should look at total comp and not your fixed salary, because bonus forms a good chunk of your salary as well. So I think this I was taught within my first job by my first boss, and he said, look at total comp. So all in all, whether you're in IB or in VC, you end up getting a similar payout. But yes, in IB, you have the kicker depending on performance, that your bonus could be a great kicker. But then again, that's a very subjective thing. It depends on your performance and also your firm's performance in that year. So I think I think that overall you can say that, people at both ends are well compensated.
So when you talk about it being well compensated, what can be an average salary range for an entry level VC right after B school? And how does it progress over the years?
So I'll tell you about equity research, investment banking, and venture capital. They all at the same ballpark range. I think straight out of campus, most investment banks would give you, whether it's a domestic investment bank or a global investment bank, they'd offer a fixed comp somewhere in the range of 16 to let's say 20 lakhs range.
This fixed CTC.
Yeah, average.
Okay.
But your variable component could be just as much or higher. Now, if you're working, this also depends on whether you're working in a middle office or you're working in a front office. So that concept is that if you're working for an India team of any investment banks, you're in the front office. Whereas if you're working for other geographies like Europe, Australia, other Asian geographies, then you're in a middle office sort of role. So someone who's working in the India office straight out of campus, they could be hitting as high as even 25 to 30 lakhs to start with straight out of campus. So that's the average range. In equity research, you would be again in the 16 to 20 lakhs range to start with. And even in venture capital, I think you can safely say, if I'm talking only about analyst positions, you'll be somewhere in the 16 to 20 lakh range. But then again, bonus is what drives the compensation. So bonus is extremely important to figure out the overall comp, and that varies from firm to firm.
Right. And what's the progression like, especially in VC?
In VC, I would say you start off as analyst. Mostly you have pre-MBA analysts. Post-MBA, you can join as a senior analyst. Then say within 1 to 1.5 or 2 years of experience post-MBA, depending on performance, you turn an associate. So currently I'm an associate with 3.5 years of experience post-MBA. And beyond associate, you become senior associate or principal, and then director or partner. Now, every firm has its own naming convention of positions, but it's, I would say, a 5-level split: analyst, associate, principal, partner, and then above that, managing partner is the general split, I would say.
Got it. Safe to say that a senior VC in a good firm can have no upper cap on their earning limit?
Yeah, safe to say that they wouldn't have an upper cap, because it depends on the fund performance and it depends on your carry. Fund has its own life cycle, so you get your carry depending on the fund completing the life cycle. So you have to stick around to get that part as well. So it's a labor of love, and you have to have patience, and eventually you do get the payout. But if you're enjoying your work, I mean, people tend to stick around.
Also, like VC also is a long-term game, right? Because like how you mentioned, a fund's performance usually comes to fruition after a particular time. You see that incremental spike probably, and that is when you get and reap all the rewards for the initial hard work probably that you have put in over there.
It's like preparing for an exam. Your first 6 months, it's all toil and a lot of hard work, and by the time your marks are supposed to come, you're supposed to be able to, it's like planting a tree, watering it every day, ensuring it gets all the nutrients that's required to blossom and have great flowers. So it takes time, but it eventually happens. And I think people in this industry, when you invest in a company, you can't expect returns within like 1 to 2 years. You partner with a company for the longer journey, because the road to an IPO is long and there are many fundraise rounds that are going on. So till the IPO hits your return, you might want to take an exit then, or you might want to take an exit somewhere in between, but it will not happen instantly in a 1 to 2 year period.
What are some of the good exit opportunities you have seen people take after VC? Is angel investing the next step, or do you have other steps before that? Or there are other things after VC that people have seen doing?
So typically a lot of VCs, some of them join their own portfolio companies as an operator role, because they worked with the company for so long. They've developed good relations with the founder, with the CXOs. They would probably, look into building a vertical in that company. They join as an operator. Some of the VCs who have like a bug for founding a company, because they have spoken to so many companies and been inspired by their journeys, they start their own company and get on the founder journey as well. So these are two exit opportunities which I've seen are very popularly looked at. You could also graduate to looking at, say, a movement to a private equity firm.
And for aspiring finance graduates who want to probably deepen their understanding in finance, also who want to make a stronger portfolio so that they can get into a good MBA college for finance, what would your advice be to them?
I think that a lot of people now can actually, financial modeling has become pretty common, which is linking the 3 financial statements: balance sheet, cash flow statement, and profit and loss statement. I think knowing financial modeling can definitely give you an edge above your peers if you are aware of that, not just when you're trying to land an internship or a final placement, but also from the point of view of how you perform at that internship and job finally. So that, and also just reading up on a specific sector, trying to analyze that sector, deep dive into it, identifying winners in that sector, forming your own opinion on that, probably writing a couple of articles about your analysis and putting it up on a blog. I think these are things that can help you stand out, because this requires time investment over a period of time, which implies that you genuinely have an interest even before you're trying to get into that role. And that takes a gestation period to develop. So I think that is something one can do to, target entry into this industry, because it's very competitive. Getting your foot in the door is one thing, but also succeeding in that is another thing. So if you develop this over a period of time, it can definitely bear fruit in the long term.
Awesome, Ayesha. Thank you so much for your insights. I'm sure I learned a lot, and people who are watching this video interested in the world of finance, who are not sure probably where to start from, they can get their foot in the door and probably think of a career progression for themselves that they can be proud of later. Thank you for doing this.
Thank you for having me on your channel as well. And I hope that people are able to get inspired to get into this industry, because it's really glamorous, it's really interesting. And if one generally has curiosity for this space, it's going to be really easy to get in.
Guys, if you liked today's episode, please do let us know in the comments below your favorite part. Also, let us know which other guests you would want us to feature next. Also, if you have any other tips or any other questions that you want to ask, you can ask to Ayesha directly. We'll link her LinkedIn handle down in the description. Meanwhile, this is Saif from Team Inside IIM signing off.